And I'm excited to see what Andy has here from a consumer purchase intent mention standpoint, because as I said at the beginning here, Andy, this one is one that, oftentimes I feel like it's left out of the conversation. It isn't as exciting as it maybe once was, yet you still see the stickers on so many new computers. They're still a huge market player, but maybe they're just not as exciting as AMD. Is that enough to hold them back?
Well, we saw that come through, I think, in the last earnings report. The stock was down 9 or 10% after they disappointed investors and delayed some of their chips. This is one for LikeFolio where the visibility that we have into this company is somewhat limited, because so much of what the company does is on the B2B side, and not a whole lot of that flows through to what consumers would be talking about on social media. But we do get good visibility into that segment, and a lot of times for companies like this, that is the big unknown, and that is that stuff on the margins is what ends up mattering as the difference between a good report and a bad report. And for Intel, we're really seeing one of the strongest consumer demand indications that we've seen at LikeFolio since 2017, and it's up 13% year over year, which is a good sign, and holding into the current quarter. And that's a good sign. And a lot of this is driven by their Mobileye brand, which is driver assist technology. And it looks like a lot of that is coming from their partnership with Ford and the announcement of the new Bronco and so on. So it looks like Intel kind of getting back in the game with that consumer recognition side of things, and it's showing through in our data. So, I think there's reason to believe that Intel will put up a quarter that is at least less disappointing than what they did last time. And probably, if I had to lean on this earnings call, I would be leaning towards the bullish side after what has been a pretty depressing year for the company. There are some glimmers of hope, I think, at least through the consumer lens.
Yeah, Andy, that's kind of what I think investors are looking for here in Intel. Like, is it safe, right? We're having like kind of a marathon man moment here in Intel. And tell us we need Andy Swan and LikeFolio data to tell us that it's safe to get back into Intel and get a trade on that has long-term. Because in the environment we're in, stay at home, Alex, buying new personal computers, things like that, Intel should be absolutely firing on all cylinders. And those headlines a quarter ago were about as bad as you could possibly be. Bad for Intel, good for AMD, obviously. So what we need to wave the flag of an all safe to get back in Intel and trade it from, at least with a bullish posture, Andy.
Yeah, I think that's, I can lean that direction. I'm not sure I'm ready to say everything's safe, because we're still talking about a company that is lagging its competitors. AMD's moved ahead. NVIDIA, absolutely dominant, I think. So you've kind of got Intel in this weird position of, is it going to be as bad as it was last time? I think, based on what we can see, which is fairly limited, the answer to that is no. But again, we don't know what we don't know. We don't know if the company is going to come out and say, once again, that our latest and greatest chips are being delayed and we're having production problems. Those types of things don't show through, no matter what we look at. And so that's always the risk, is when a company starts to not execute well, that it continues. And I think what Wall Street's probably looking for here on this quarter is just some assurance that that was a blip on the radar and that Intel has its feet underneath of it again. And from a consumer perspective, I think they do. And I think, Kevin, you're right. It's kind of just one of those, they missed a really big opportunity. As everybody was home, reordering new laptops and computers and buying cars like crazy with what should have been Mobileye technology in them, Intel just kind of missed the opportunity, and that's tough for investors to forgive. We'll see what happens when they report.
Andy, you mentioned that if you had to choose, at least for earnings, you'd probably lean to the bullish side. But on more the longer term here, leaning into your kind of entrepreneurial insights that you have, when you hear a company like Intel, which of course is a massive company, it's acquired so many things throughout the years, has so many different kind of arms in different businesses, when they start to divest things, and that is what they're doing with the selling of the NAND chips to the South Korean company. Is that to you a worrisome kind of insight, or is that something that's like, okay, they're refocusing here to their core business competencies? They're trying to do kind of what Starbucks did, let's say, a few years ago, where they really doubled and tripled down on growing same-store sales and getting returning customers and getting you to buy the breakfast sandwich, as opposed to maybe buying the Starbucks merchandise that they had kind of ventured into. So is it more like Starbucks, or is this more worrisome?
Yeah, I don't think it's worrisome. The more worrisome thing to me is the outperformance by peers. It takes a long time in this space for things to really shift. And anytime you get an indication that they're shifting in the wrong direction, that can definitely be worrisome because those things can be prolonged. I think, with a gun to my head, if I had to be bullish or bearish on Intel over the next 5 years, I would probably look and see that the CEO's name is Bob Swan, which is my dad's name. And so I'd just go to the bullish side for that reason and that reason alone.